Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, January 3rd, 2023. Before I jump into the charts, just want to have you please click like if you haven't already each and every time you watch the daily Tesla report and any other material that we're uploading daily. We're starting the daily NVIDIA report actually next week. We are continuing with the daily Apple report through this week. Please click like in each and every one of them if you would. And subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. And that includes the daily Tesla report. And if you would, please share the content with friends and colleagues. So I will start with this chart. The first couple charts I'll show you are weekly bar charts. If you've been watching the daily Tesla report for the last few months, you know that the first week of October, right out of the gates on a Monday morning, we had a significant sell signal off of this area that was in the 240s at the time, and maybe the 260s actually, as I recall, anticipating this channel bottom as an area that just might have contained quarterly selling pressures. From here, I was anticipating the possibility of coming off of this area nicely over the following several months. That obviously did not happen, and what occurred 3 weeks ago was a settlement violation of this band of channel support that this week is between 160, 163, and 169.74. In the process, it set off a 3 to 5 week sell signal that was realized within about 2 weeks. We dipped into this next channel support that this week is 101.16 to 112.86, a wide zone over 10 points wide that can still contain selling, I'm going to say through the month of January and into February, because from here, a 3 to 5 week rally is envisioned into the low 170s again, or actually the upper 160s, back into this zone. It's difficult. I could draw both of them on one chart, but it looks confusing. So coming off of that support that I showed a moment ago that is now around 112.86 down to 101.16, we can over the next 3 to 5 weeks, and I think should continue into the 160s, where we could actually top out through February, possibly the balance of Q1. And as I've been saying, not unless we close above the 169.74 level, dropping gradually, am I personally comfortable in playing the long side and being a long-term investor in Tesla, which is to say into later 23. If we can get back up and over 169.74, I think we've got a good long-term low, and the market should show at least stability, if not outright bullish continuation, as we continue into the second quarter. But we're nowhere near that right now. I'm just painting the big, broad brushstroke. Let's take a look. Let's see here. This kind of summarizes it on the daily chart. So everything I just showed you on the weekly chart, that upper resistance area that we violated a few weeks ago is now 162.24 to 170.64 on the daily chart. This is our targeted zone over the next 3 to 5 weeks. And these horizontal lines represent those channel support levels that I show here on the weekly chart, just so you have a frame of reference. So this is the same on the daily chart. And if I continue with that, so that is, I'm going to go back to this. Sorry for the jumping around. 101.16 to 112.86 is our bottom picking zone this week, this wide area, able to absorb selling through January into February, and above which, if your time horizon is 3 to 5 weeks, 2 to 3 weeks, 3 to 5 weeks, you are long now anticipating the 160s. Now, on the way up, and this is sort of the 1 to 2 week time horizon. On the way up, we have two meaningful trend lines. One is off these old lows, looks like February, May of 22. That is at 141.50 this week. And we also have a descending, steeply descending channel top, trend line at 150.67. So these, as you can see in the support resistance area, are 3-star resistance levels able to contain weekly buying pressures. And we might reach this by the end of the week. I have my doubts. I think it'll spill into next week. But the important point to make is here is next week, these two trend lines actually converge entirely on January 10th. So a week from now, we could be pushing into the zone, which would make it a more convenient resistance area to sell into, take profits at, if you're more of a swing trader, a 1 to 2 week swing trader. This is the 1 to 2 week time horizon. Bottom picking the 101.16 to 112.86 region and potentially taking profits in this narrowing zone of near-term resistance between 140.150 and 150.67. But keep in mind that I'm still anticipating the 161.63 to 169.74 area as a 3 to 5 week objective. So closing above this area is considered an eventuality. That's the 1 to 2 week time horizon. Now for the day itself. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. The day itself shows intraday resistance at 123.04. Simple trend line off the November lows that can contain intraday buying pressures. And from here, we could perhaps today fall back to 112.86 to 113.88, long-term support that I've already outlined. But if we push or open today above 123.04, that would be consistent with having tested long-term support, the market able to come off of this nicely, once again anticipating the 160s over the next 3 to 5 weeks. Pushing, especially opening today above 123.04, does allow 133.36. It's another trend line off these lows, and I have that designated as a level that can contain daily buying pressures. All the minor points have been carefully chosen as usual, and so if we open below 123.04, you can have at 119.75, which is nothing more than last Friday's low. 116.27 is the high of the low. I almost wanted to call this its own intraday support level, and it can contain intraday selling pressures, but it is just above this 113.88 to 112.86 region. Once again, 112.86 is this band of channel support. On the weekly chart, 113.88 is the very same exact line, but on the daily chart. So 112.86 to 113.88, narrowing every day this week, able to absorb selling not only for the week, but because it's a band of long-term support, quite possibly through January, and above which, once again, the 160s anticipated over the next 3 to 5 weeks. If we do happen to close today above 133.36, we should test the 141.50 level tomorrow. 141.50, once again, I'll remind you, is this sort of trend line convergence all the way up to 150.67. So this area up here between 141.50 and 150.67, narrowing daily, dropping a little bit every day, and able to contain weekly buying pressures. We could come off of here nicely, possibly for the following week or two. So this zone is a good swing trade for the 1 to 2 week trader. Being long, assumingly, from the 112.86 area, we can top out here in the 140s, we'll call it, on a 1 to 2 week basis. If we close above 150.67, then that 161.63 to 169.74 area, likely within just another week of trade, where once again we can top out into February and perhaps fall off from there. Let's take a look at the downside today, that in the event we not only close below 113.88, but keep in mind that same formation on the weekly chart, is 112.86. If we close today below 112.86, we should, within the week, fall all the way to 101.16. This is still the beginning of a wide zone. I'm not crazy about the wide zones. I like to be more precise and hinge off single levels, but you cannot deny this channel band of channel support as a range of support that begins at 112.86 and ends at 101.16 and can contain selling into February, and above which the 160s expected over the next 3 to 5 weeks. Now, 101.16 would be pretty much a 2 to 3 day target if we close today below 112.86. 101.16 also able to contain selling through January into February. And we could continue bottoming out here for the next few weeks before the market may muster its assumed rally into the 160s. But if we do close the week Friday below 101.16, the bloodletting continues, and we can, over the following 2 to 3 months, continue south into the 20s. Perhaps that 23.36 March COVID low would be in reach. There will be support levels on the way down that will be worth mentioning. But this 101.16 to 112.86 area is your bottom picking zone if you're a 3 to 5 week trader, not an investor. And once again, investing in Tesla long term, in my opinion, shouldn't be done unless we can get back up and over this 160s longer term resistance. I think that pretty much summarizes it. Please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Be back tomorrow with Wednesday's Daily Tesla Report.